It's time for Wise Money with Korhorn Financial Group with certified financial planners Kevin Korhorn, Mike Bernard, and Josh Gregory.
Welcome to another episode of the Wise Money Show with Korhorn Financial Group, where every week we're helping you take your next wise step in your financial life. Thanks for being here, friends. My name is Mike Bernard. I am your host, also one of the certified financial planners on the show. Special show for you today. With me in the KFG studios, Joshua Gregory, as always, and two special guests, Medicare experts Ted Foster and Craig Wiker.
That's right. Medicare open enrollment is upon us again, and we are excited to welcome you guys into the studio. Craig Wiker and Ted Foster, they're both insurance advisors and Medicare specialists. They're here to help us break down the confusing Medicare system. We're going to cover the basics and the trends to help you make a great Medicare decision in your life.
Right when you want it to be easy, it is as complicated as they can possibly make it. We're going to try and simplify it for you today. Finishing the show, we got a bunch of questions from fans of the show. You can leave a question and engage with the show a couple different ways. Online, find us at wisemoneyshow.com. Submit a question right there on the right. You can call or text 574-222-2000. That's 574-222-2000. And honestly, most of the engagement comes on social media. Submit questions, and that's the YouTube channel, Facebook, Twitter, wherever. Just search Wise Money Show and engage with the show that way and submit questions there as well. All right, welcome back, Ted. And Craig, we are glad to have you on the show. It's the first time we're having you. So Craig Wiker has been on the KFG team now for a couple years, working as a health insurance Medicare expert. But you've been in the community forever and owned a business and so on. And we're glad to have you. So I'm glad to have your expertise on the show.
Thank you.
All right, so let's start with the foundation. And Ted, your very first show here with us at KFG 6 years ago on the Wise Money Show, you said something that still sticks with me today, and that is, well, when you're trying to understand the basics of Medicare, you first got to start with the plans or the parts, and then you go to the plans. So let's start with the parts of Medicare.
Sure. Part A, mostly that's your hospital expenses. Part B, typically that's your doctor expenses and tests. Part C are the Medicare Advantage plans, where you opt out of Medicare and buy a plan directly from an insurance company. And Part D is the prescription drug plans, the one that makes sense, D for drugs.
D for drug. All right, so let's dive a little bit deeper, and either one of you. I mean, so Part A, you said that's hospital. So what's the cost? What's the out-of-pocket cost? When does someone enroll? So some of the details with Part A.
Well, Part A is entitled. You're entitled to Part A because of working during your career.
Yep.
And paying that Medicare tax, and now you're entitled to it.
Okay.
So you're already paid up, and they're not going to hit you with a new bill then, you're saying?
That's correct.
So, but is there an extra cost in retirement?
There is not. There is always the possibility, if you didn't work enough quarters during your working lifetime, that you would have to pay some or all of the cost of A. But that is rare. Hardly ever do we find anybody that pays anything for Part A.
So what would that cost be? And how much does someone need to work?
And not to give you cost B with Part B.
I'm sorry. What is the cost for Part A? Excuse me there.
So it's expensive if you have to pay for it. It's over $700 a month.
Wow.
And so, as I said, though, very rare. Typically, it's someone that has not lived in this country throughout their working lifetime. Or maybe you never had a job and never were married, because if you're married, your spouse is working, will pay yours. So it's rare.
All right.
I'm impressed that both of you avoided the temptation to call Part A free. And maybe Kevin Korhorn coached you up or something, because anytime we call anything free around here, he's quick to remind us, it's not free. Someone's paying for that, right?
That's right.
And this one we paid for throughout our working life.
That's right.
Correct.
Okay, so and what about enrollment? Is that automatic? I mean, Craig, you mentioned it's an entitlement, but for working, right? But so is enrollment automatic, and at what age?
When you enroll in Medicare at age 65, that is the initial enrollment of the Part A. Part B is something you elect to do. You don't necessarily have to begin with A and B.
Okay, we'll get into that in just a second. If you are, so as soon as you're 65, if you're on Social Security, you're automatically enrolled in Part A.
That's correct.
Okay, all right. And if you're not on Social Security, what do you do with Part A?
This is a mystery. This remains somewhat of a mystery to me.
Yeah.
People will come in that have not contacted Social Security, do not draw Social Security, and have Part A. And I'm like, how did that happen? And so,
Big Brother was watching.
yeah.
Yes.
Looking out for them, maybe,
Typically,
huh?
though, I say to people, until you start drawing Social Security, they don't know who you are yet. You would think you've sent them hundreds of thousands of dollars, they'd know you, but they kind of don't know who you are until you contact them. So, might as well get A.
Yeah.
Going in, no harm, no foul. May or may not save you a nickel somewhere along the way, but why not get it?
Got it. Okay, so let's move on to Part B then. So cost of Part B, when do you enroll, how do you enroll, that sort of thing.
Cost for Part B this year is $144.60 per month. That's the base cost. That can be higher if your income is higher. I can't remember the numbers off the top of my head, but it's about $170,000 for a household income for a couple, and $85,000 for a single, somewhere in there. If it's higher than that, then you're going to pay more for Part B. So you will want to have Part B if you are self-employed, if you are work for a company with fewer than 20 employees. You do not need Part B if you're on a group health plan with more than 20 employees.
So you're talking about people who are over age 65, but they're still working, still covered by a plan at work. You don't have to add this extra coverage because essentially your work coverage is giving you everything that you need. You don't have to pay this extra $144 a month in that situation.
That's correct, yes.
Okay.
All right. What about increases to the cost for Part B? How do we project that out?
So here's we don't, but you can add a percentage if you choose. Here's how that works. So it's $144.60 this year. You're drawing Social Security. They can only raise that $144.60 if they give you a raise in your Social Security income. If they don't raise your Social Security, they cannot raise the Part B cost. The challenge to that is that doesn't mean it disappeared. That means it's deferred until somewhere down the road when you get a raise in Social Security. So it may have had 1, 2, 3, maybe 4 increases since you got a raise in Social Security. Mm-hmm. So when you now get your raise in Social Security, you'll need to catch up.
Is it safe to say any increase from this point forward in Social Security will equal the increase you're going to have to pay in Medicare? I mean, would that almost be a safest? Really? Okay.
I'm not going to let you have that.
Oh, okay.
I know what you're thinking. I know what you're but I'm not going to let you have that. For example, this last time, we got an increase that was greater than the increase in Social Security. The Part B, the increase in Part B. Sorry, the Part B increase only went up a few dollars, but if you had a reasonably priced Social Security check, it was more than that.
Okay, good.
So this last go round caught people up that had not been caught up for several years. They were still back at the $121 or the $118. Mm-hmm. And so now almost everyone is on the $144.60.
Got it.
That's interesting.
And by the way, so the Wise Money Show is about financial planning and having wise financial principles. And we talk about the 5-factor retirement plan that you need to go through to figure out where are you today and then what path you need to be on to reach your, the ideal, optimal financial future that you envision. And so you absolutely need to include health insurance as part of that future cost, and you've got to include inflation. Now, to us, we inflate Medicare costs at a higher rate than maybe what's been historically in place just because we want to hedge, and right now, health insurance costs are rising. So we've got a lot more to hit, Part D and different plans. So we got that and more coming up on the Wise Money Show with Korhorn Financial Group. Hello, YouTube. Thanks for being here. This is the Wise Money Show. You're at the Wise Money Show channel. If you're not a subscriber, hit that subscribe button, turn on notifications, and like the content as well. What you're watching right now is our weekly 1-hour talk show that airs right here on this YouTube channel every Saturday at 10 a.m. It's also on podcast, wherever you listen to that, also at the same time. So check it out. If you're not into a long 1-hour program, feel free to also subscribe, because every single business day we've got a next wise step, a more palatable 8-minute, 10-minute, something going on in the financial world applied to you, helping you take your next wise step in your financial life. So make sure you hit that subscribe button, turn on notifications, and like the content as well. Thank you. All right. So I think I'm going to jump part C, and we'll do a deeper, okay, what is part D? What's the cost? When do you enroll? How do you enroll?
Can we also hit just maybe one or two more items on part B?
Yeah.
Okay.
Yeah. So we'll pick that up, and then that should flow nicely into, okay, so talk about supplement plans, and then how do you package this all together? So I think we're a little behind how it's laid out, but it's all still flowing the right way.
Yeah. And Josh, I think this, if it's a question that's in your mind, it's probably a question that's in their mind.
Mm-hmm.
Yeah.
You know, I think, and you guys know, if you it doesn't have to be, just any question you have. Let's get them in the air.
To me, I want to make sure that we hit some of the financial planning aspects of Medicare, or in particular Part B, and how much you pay for Part B, that sort of thing. And maybe I'll throw out a scenario that you and I have had conversations about in the past, where what if you have a spike in your income one year, and it's going to threaten to increase your Part B premiums? Is there anything that you can do?
And you understand that more than I do.
Yeah.
Yeah.
I might throw out a quick question to you, Craig, just about
Easy
how
ones.
you pay. Yeah, there you go. I'll lob a softball.
Please.
Got it.
Just because we need to get that in.
Can you
Yeah.
pull your mic a little closer too? Ted.
Brian?
Yeah.
Okay.
Because you keep turning your head.
I know I'm terrible at that. I know in my mind I want to talk to you, but I talk to him.
You gotta do what Mike does. He keeps his mouth basically the same.
Right.
Just turns the top
I'm not
of
very
his
good at
head.
that, but I'll do better.
All right. Let's roll. How do you make a great decision with your most important health insurance decision of your life? And that's right. How do you choose Medicare? What parts, what plans, what approach do you take? That's what we're helping you with right now. This is the Wise Money Show with Korhorn Financial Group. Thanks for being here. My name is Mike Bernard. Here with me in the KFG studios, Josh Gregory as always, and then two health insurance experts on the KFG team, Ted Foster, Craig Wiker. We're blessed to have them with us today. If you've missed anything so far or want to catch up on previous episodes, every episode of the Wise Money Show is on podcast. Check it out wherever you listen to podcasts, iTunes, Spotify, wherever. Just search Wise Money Show and subscribe to it. And wherever you're listening, I would encourage you rate the show as well. Leave comments. We appreciate that. Okay, so we're going through the different parts of Medicare before we touch on plans and how y'all package this together. A couple follow-up questions on Part B before we get into Part D, right, Josh?
Yeah, I mean, there's some important concepts here, I think. And as you know, I mean, this is a show about financial planning. And so we dive into some of these nitty-gritty type detailed topics sometimes, but sometimes it's good to zoom back out and say, okay, how does this issue affect other areas of someone's financial life, and vice versa? And we were just talking about the Part B, which, if you think of your insurance structure when you get into retirement as being kind of multi-layered, where there's, I'm going to say it, the free option or the free portion, which is your Part A coverage. You don't pay for that, or you already paid for it.
Already paid portion.
There you go. That's a better way to say it.
Right.
You've got Part B, which is going to cost you something out of pocket or out of your income in real time every single month.
Monthly basis.
That's right. And then you've got Medicare supplements, which we're going to get into, and then a Part D. So there's these layers. But that Part B one, it's kind of, in a sense, means tested, right? I mean, it depends on what your income level is when we're trying to determine how much you're going to pay each month. We said in the last segment that it's $144 per month for most people, right? So first question, real quick, Craig, is, well, how do people pay that $144? Is it a bill that shows up in their mailbox? How is that logistically handled?
So if you're drawing Social Security, they will take that out of your Social Security check.
Yeah.
Okay,
If you're
automatically.
not- correct. And that would be on a monthly basis. If you're not drawing Social Security, they're going to send you a bill quarterly.
Quarterly. That's right.
And so here's the potential trap that sometimes we see from a financial planning perspective. If that $144 amount is dependent upon your income, what happens if your income drifts too high? Or maybe it spikes suddenly in 1 year because you sold some property or you got a major bonus or something suddenly drives your income up. And all of a sudden, you could be jumping into a higher threshold where it's not $144 that they're automatically pulling out of your Social Security. It's something bigger. Is there anything that people can do in a circumstance like that to avoid maybe the potential folly of stumbling into this problem?
Okay, so always remember this for starters. Their Social Security is going to look 2 years back. So they're going to look at your tax return from 2 years ago. So in 2020, they're looking at 2018, and they're saying, how much was your income that year? And then they're going to determine, you're over the threshold, you'll have to pay a surcharge. You have to pay more for Medicare B. And let's not forget to add, they also add that surcharge to your Part D. So you get both of those get raised.
Good point.
And so that's going to happen unless it was a one-time event and you file an appeal to Social Security and say, look, this is what happened, and I'm never going to have that income again, probably, and I haven't ever had it before. Can I have an exception? Mm-hmm. Those are not terribly difficult to get. There's a form on the Social Security website, and you go there and you get the form, you fill it out, submit it. Typically, if it is a one-time spike, they're going to let you off the hook on that and not surcharge you.
But if it has the chance of happening again, and you think it's you can just argue your case. I've seen some where it's like, I think this could go either way. Where no, they enforce it.
Yeah.
This is also a place where your insurance advisor and your certified financial planner need to be collaborating, right? Because remember, they're looking at your tax return to determine what level of income they're going to measure against to see how much you should be paying for this monthly bill. Well, there are some things that you could be doing potentially to help kind of artificially squeeze that income down and hold yourself below that income threshold. So this is maybe one of those crossroads where your tax planning and your insurance decision making, they kind of come together, and you need to consider both angles when you're making this choice.
And that's a great point, Josh. I call our tax department with questions for people, 3-4 times a week.
Yeah.
People will call and say, hey, Ted, what's this going to be like? And I'll call over our tax department and say, this is really a tax question. Help me out. And then I get an answer back, and so we always work together on that.
All right, so let's talk about Part D then. You mentioned that it's also subject to that surcharge there, but when do you enroll in Part D? And what's a typical cost, and is sort of like Medicare Part B? Is it just one part, or are there multiple choices with Part D? How's that work?
So, no.
Yeah. Okay.
So Part D is the drug plans, and there's around 21 or 22 of those in this county, and it's about the same number in Michigan. So we've got about 20 choices we're going to make on what drug plan should we own. And we're going to make that decision based on what prescriptions do you take. Not do we like this company or do we like that company, or is this one cheaper than that one on premium. We want to know what the total cost is. We want to know the premium added to what you're going to pay when you fill your prescriptions at the pharmacy. Right. So that is how we decided. And Craig and I both go through the same process on that. Look at all your drugs, key them in. We usually use Medicare.gov. There's we hopefully have a better system this year. But so far, it's going to be Medicare.gov until it comes out. And we put them in, and it says, so the best plan for you is this one. And unless once in a while, we'll have a plan that maybe is under sanction. They've done something wrong, and so we don't want to put our clients with them, so we have to make that decision. But typically, it's just a money decision.
You know what? I've watched you guys walk clients through that process, and not to turn this into some sort of infomercial on how to really, truly shop for the right policy. But I mean, you've explained, and you just did, that It's what prescriptions are you taking, where are you living? Isn't it also what pharmacy you prefer to go to
correct.
even?
That's correct. We look at it as just a shopping experience. We're like personal shoppers, if you will, and you just need
like
to tell
that.
me what's important to you. Well, certainly the prescriptions that you take are important to you, but where you get those prescriptions filled may or may not have a high priority for you.
Yeah.
You may think, hey, if I can save $3 in a calendar year, I'll go wherever I need to go. You may also say, I don't care if it costs me an extra $30 a month. I need to go to Tom's Pharmacy. I hope there's not a Tom's out there. I'm not trying to endorse that. But we just kind of tailor that shopping for them, and we look at this as a like a coupon card, if you will, and all we're worried about beginning October 15th is 2021's coupon card.
Yeah.
Okay? And it's a 1-year commitment, so we want to do that on an annual basis for people.
Well, that's a good point, and we're going to get into this more. But I mean, during open enrollment, we're going to talk about what that is here in just a second. But I mean, specifically with the drug plan, your prescriptions could change every year, or really at any time. And then, some of these coverages within Part D, those can change from year to year. So it's important that you're talking with your Medicare expert, someone like Ted, someone like Craig, and talking through on an annual basis, hey, what's changed, and am I still using the right plan? So we're going to go to the next level with that, and how do you package this all together? That more coming up on the Wise Money Show with Korhorn Financial Group. All right. Good stuff. 2 segments down.
No, I have a case study.
Oh,
Nice.
yeah.
So
Go ahead.
Tying into what you just talked about, I
Yeah.
had a case study to share, which was, I had a turning 65 come in on Tuesday with her husband, who's 70. He is not a Korhorn health insurance customer or at any level, but so they're new. They're new. They come to see me, and in our conversation, he says, "Hey, maybe you can help me out. I don't even take any drugs, and I'm paying $52 a month for this drug plan that I have."
Oh, wow.
And, immediately I knew what the situation was, and that is he hadn't gone to see anyone to have it shopped annually.
Yeah.
And last year, his what was $22 drug plan, he
More
got
than double.
moved into a new drug plan automatically because the companies, that particular drug company shuffled some of their plans around, and it, no fault to anybody or whatever, but they just shuffled him over there, and now he's paying $52 so that he can buy a Torvastatin for $1. If he didn't have that plan, it would cost him $1.
Wow.
It's so.
Well, that's the reason why you have, a relationship with well, number one, a CFP, but with someone like you guys.
Yeah.
So,
and had he come to see us, he would, or anyone, us or anyone, he would have been with the same company in a plan that cost $13.20.
And don't let us miss this information. If you're still at work, but you have a drug plan on your group health that's not creditable, you need to buy one.
Yeah.
And that's hardly anyone knows that, but that is the way it works.
That's your job.
okay, so here's the thing. We're entering third segment. Let's keep on the track that we're going, but it seems like these questions that I have laid out on the outline in segment 3, that should be our segment 4. Those should be our questions that we go through. And so let's just keep on the same track. No reason to rush or deviate. And Craig, is that so that just aired on the YouTube channel, what you just shared, that story. Is that story, should we say that on the air? On the radio? I mean, is that something you'd...
Yeah, I don't need to share the company name. I didn't.
Yeah.
But it's not uncommon.
Yeah.
The whole drug plan Part D business seems to be in a high mode of evolution presently.
Really?
It's new. It's a relatively new thing. And
Companies are trying to figure out the pricing on it and how they want to compete in
Arrangements
that
and-
marketplace.
Yeah, and there's a lot of consolidating of companies, and there's, of course, changes in popularity of prescriptions, and then there's the the deliverers, the pharmacies that are also going through those same modes. So
I mean, lots of people on hydroxychloroquine.
that's right.
Just kidding.
I'm
All right,
impressed
here we
that you could say that.
I know, I had to pause for a second to make sure everything was connected in my brain. All right, here we go. Surprisingly, lots of decisions you've got to make about Part D. We got a story coming up on why it's so important, so crucial that you have a relationship with a Medicare expert and you're talking with them each and every year regarding Part D. So we got that and more right now. This is the Wise Money Show with Korhorn Financial Group. Thanks for being here. My name is Mike Bernard. Here with me in the KFG studios, Josh Gregory, and then special guests, health insurance experts, Ted Foster and Craig Wiker. Every episode of the Wise Money Show is on the YouTube channel. Go to YouTube, check out the Wise Money Show, subscribe to it, like the content as well, and you can leave questions there. We get a lot of questions right at the YouTube channel, so check it out right there. Okay, so we're still making our way through the basic parts, and so we're on Part D. But Craig, over the break, you were talking about how important it is that you stay connected with your health insurance agent because things change. You had a recent example of that, right?
Right, and talking about how the drug plans are different every year. In fact, we don't get to see what 2020's drug plans are at all until October 1st.
Yeah.
And so I had a lady come in earlier this week who was turning 65 and needed to sign up for Medicare, a supplement plan and a drug plan, and she brought her husband who's 70 and already has a supplement and a drug plan. But he made the comment to me, well, maybe you can help me with mine. And he said, I don't even take anything, and suddenly I'm paying $52 a month for a drug plan. And what had happened is he hadn't gone to see anybody about reviewing his drug plan since he began Medicare 5 years ago, and the drug plan that he is in has evolved and changed around and is up to $52. It just happens to be, but he doesn't take any prescriptions. And if he shopped it annually, he would have been with the same company but in a different plan. That would be $13.20. So
oh my goodness,
he's paying 40 times 12, $480 a year extra for the privilege to buy the same drug for $1 a month.
Isn't that the risk, though? I mean, when it comes to insurance, a lot of people, they'll zoom in on a decision, they'll make that decision, and then it goes completely on autopilot.
Right.
And before you know it, things have changed. You've drifted off course a little bit. What was once a great decision is no longer really the best.
Right.
And that's not just health insurance. I mean, that
Correct.
could be your home and auto insurance. Yep. It could be any area where you just kind of make a decision and then just let it go. So staying connected with a professional who can guide you through those changes, I think, is pretty huge. What a great story.
So I get these words mixed up every once in a while. So credible or creditable. I honestly don't even know which one applies. I know the difference between them. But with Part D in particular, in order, if you're already eligible for Part D, but you're on a group plan that has drug coverage, it needs to be creditable.
Yes, sir.
And and if it's not, you better get one. Right,
Yeah.
Right, Ted.
It's a crazy rule, and most people that are still employed don't know it, don't pay attention to it. Most employers don't really understand it, so they don't help you with that. But here's the thing: so if you're on a group health plan that has prescription drugs, you're supposed to get a letter each year from your employer that says your group health plan drug benefit is or is not creditable by definition. If it is not creditable, even though you have group health insurance, if it is not creditable, you need to purchase a Part D drug plan. If it is creditable, you won't need to do that.
Yeah. So there again, I mean, even if you think, hey, I'm turning 65, I'm going to delay my Medicare stuff because I'm still working, and so I'll just put that on the back burner. I'll deal with it later. You got to be talking with your certified financial planner. And I tell you, before we had Ted and Craig on our team, my understanding of this was sort of surfacey. And I would have just said, well, talk to an insurance expert. But now we've got them right on our team, and we can collaborate together. And when those sorts of things come up, that's okay, I know there's something here. Let's bring an expert into the room. We do that right away. And so you've got to have that sort of team. You've got to have those experts in your corner. All right, so we skipped over. Well, no, let's hit plans really quick. So what are Medicare plans?
Okay, so the plans are typically, we'll talk about Medicare supplements as the plans, and those are A through N. Just to make it simple, they reused the alphabet, that just doesn't help. But anyhow, that's why we use Part A, B, C, and D, and plans A through N. Up until a couple years ago, most plans sold with the number one plan was Plan F. The government passed a law that says no one can entering at Medicare at age 65 can purchase a plan with no deductible. In other words, you have to reach in your wallet, pay some medical bills prior to your insurance company paying. They left an exception in there. If you're retiring, coming off a group plan later than age 65, then you can still buy a Plan F if you choose to. The challenge is the rates have kind of escalated out of the competitive realm. So most of the time we use a Plan G or a Plan N. And I've seen a couple other agents that used a different option, but you have to decide what fits your situation best. The Medicare supplements cost more than going with a Medicare Advantage plan, the Part D, Part C. But you have to make that decision. Do you want the simplicity, pay the extra money, or do you want to manage your plan and save a couple dollars on premium?
Okay, so you've got to make a decision. Anytime there's a financial decision to make, go back a few episodes, you need to have financial wisdom. You need to be applying financial wisdom. So how do you do that? Through the context of all 6 areas of your financial life intersected together, and then having the financial professionals in your life collaborating. That decision is exactly where Josh and I and our team of certified financial planners at KFG get involved.
Well, and maybe you already made that decision, and now you're kind of circling back to it and wondering, was it the right decision? Maybe I got a Medicare supplement plan, but boy, it's kind of expensive, and could I have gone a different route with Medicare Advantage instead? Maybe the exact opposite is your situation. You chose Medicare Advantage, and now you want to go the other route. So if someone begins to have buyer's remorse, or they're just not sure if they used the right decision-making process when they made their pick a year or two ago, what are their choices? Like, what are they just locked in forever, or do they have some sort of options to make a switch?
Yeah, well, you're not necessarily locked in forever. We have a high percentage of our customers elect to go with a supplement plan and then a standalone drug plan, but we talk to them about their options of both, and basically you can begin in a supplement at age 65 or when you first begin Medicare without any questions. Doesn't matter your conditions or anything like that. But if you once you decide to be in an Advantage plan and you later think, I'm having that buyer's remorse, maybe I want to go to the supplement side, then you have to go through medical underwriting. And there's about 13 or 14 questions that any given insurance company is going to ask you, and if you can answer no to all of those, you're probably going to be fine. But if you answer yes to one of those, you're probably not going to be fine.
Yeah, so basically I would sum it up like this. You have this decision to make, and I'm going to consolidate it. We're running out of time. But you have a decision to make whether you want to go with Part A, B, D in a supplement, and then what type of, or what plans within D and what plan of a supplement. Or you go with Medicare Part C, where you're paying your Part B rate, but then you're getting other insurance through Medicare Advantage plans, Part C. And there's a big difference. There's a difference in cost. There's a difference in coverage. That's where your certified financial planner needs to be working with your health insurance expert and help guide you in that decision. We're going to be breaking that down, as well as several questions related to Medicare. That and more coming up here on the Wise Money Show with Korhorn Financial Group. Time flies. That was one show right there. So I gave a little pause there. She can cut in the other stuff, and then we'll get into, we've got 13 minutes of, there's a whole bunch of questions here, and we can get into anything else we need to. So we're not going to be able to hit everything.
Oh, no.
So
You have to admire Craig for jumping in there on one of the most difficult questions we had all hour.
I know. I love it. I love it.
Yeah?
Yeah, that going back to from a Medicare Advantage to Medicare is a difficult
It's tricky,
question.
isn't it? Yeah.
Because there's the 12-month. If you've only been in for 12 months or less, you can do it guaranteed. But if you have after the 12th month, then you have to answer medical questions.
That would take the next 13
Yeah,
years.
exactly.
I know.
All the nuances.
I tried to just trim it.
I was impressed that you jumped right in there. Good job.
Yeah, that was great. All right. Well, let's dive in.
You ask them, we'll answer them.
Okay. All right. Let's do it. Thanks for being with us. This is the Wise Money Show with Korhorn Financial Group. My name is Mike Bernard. Right here with me in the KFG studios, Josh Gregory, as well as health insurance experts on the KFG team, Craig Wiker and Ted Foster. If you've missed anything, feel free to check out every episode of the Wise Money Show on podcast or the YouTube channel or at wisemoneyshow.com. You want to leave comments for the show, you can find us on YouTube or wherever you're at on social media. We are right there as well. Just search the Wise Money Show. Okay, so we're going to transition into questions, lots of different questions. We've gotten these from clients, from fans of the show, and some of them are just questions we've thought of as well. So let's just popcorn several questions about Medicare since we've laid the foundation. What are the parts A, B, C, and D? What are the plans within supplements? And then that big choice that you've got to make. I call it the biggest health insurance choice that you're going to make in your lifetime. So my first question is, we're entering open enrollment right now. What is open enrollment? What are you allowed to do even? I think that phrase, open enrollment, I don't think a lot of people even know what that means. So when does it start? When does it end? And what do you do during open enrollment?
I'm going to let you answer that.
Okay, so open enrollment is for your Medicare Part C and Part D. That's it. Medicare supplements do not have a, quote, open enrollment. You can change those throughout the year if you choose to and if you're medically qualified. So take the Medicare supplements out of the open enrollment equation. During open enrollment, you can make a change, almost any change you want to make. You can change your drug plans. You can change from one Medicare Advantage plan to a different Medicare Advantage plan. You could drop your supplement and purchase a Medicare Advantage with a prescription drug built into it. Mm-hmm. So the open enrollment, though, is for C and D.
It's for C and D, but you mentioned something there. That's your opportunity to do a potential redo on that big decision. If you already signed up for, I would call it traditional Medicare. Sorry, that's my term, not your guys's, but mm-hmm. A, B, D, and a supplement.
Yeah.
During an open enrollment, you can say, hey, this cost is too much. I'd like to switch over to Medicare Advantage Part C.
Correct.
How often does that happen?
Oh, it happens. I don't know how often, but
I would have said never.
No, it does happen. So you bought a plan F years ago. I had a gentleman, and just this week we make that change on. I'll tell you about it a little bit. Yeah. So he bought an F several years ago, and now he's a little older, and the rates have gotten up quite a bit because the Fs are going up kind of rapidly. He cannot medically qualify to get from an F over to a G or something, so he just doesn't qualify.
You've got to medically qualify if you're switching your supplement plan?
Correct. Mm-hmm. Yep.
And like you said, there's no period during the year where you're just guaranteed that. You always have to qualify, you're saying.
That's correct.
That's huge.
Always. Do I use the word always? No, I don't.
It's like free.
I don't think I use that word. I would say very rarely. There are that I know of a couple companies. If you're in their plan, they'll let you drop to the lower price plan. But most of them require underwriting even to stay with their own company in the lower price plan.
No kidding.
Yeah.
So you can switch from traditional Medicare supplement, whatever, over to an Advantage plan without medically going through medical underwriting.
Correct. One question.
Wow.
End stage renal disease. Only question.
Correct.
Other than that, yes. So for this gentleman, he doesn't have too many claims, but he does have some medical conditions.
Okay.
And so if he's not going to have a lot of claims, and if we don't think he's going to have a lot of claims, then it's it very probably is a good idea for him. So we'll take a hard look at that.
Interesting. Okay, so open enrollment for Part C. Okay, well, let me ask you this: if you're already on an Advantage plan, Part C, and in open enrollment you want to switch, do you switch from one Advantage plan to another? Do you have to do medical underwriting?
No, sir.
Okay. And that's why they call it
I'm
open.
going to ask that same single question, end stage renal.
Oh, yeah, that's it.
That's
okay. And then what about this? I had this question this week when I was kind of talking about this at a high level. The Medicare Advantage plans, they vary in cost. And if you dive under the hood, that cost varies because there's subsidies from the government. Is that still correct? I mean, are there some Advantage plans that are no cost?
There are some Advantage plans that are no cost, and I'm just going to make an assumption that the subsidies, as far as that goes, are consistent in all plans.
Okay.
At least, the government's doing the same thing on all of them, but it's the bells and whistles, if you will, that are added to those plans that result in a different rate of.
Got it. So here's the question that was posed to me. What if the government changes how much they're subsidizing or their entanglement in the Medicare Part C premiums?
Mike is bound and determined to find some sort of conspiracy theory here. I think.
Do you recall a few years back when we had a savings of $4 billion from Medicare under a previous administration, and they touted the $4 billion savings? The $4 billion savings is because they didn't give the $4 billion to the insurance companies for your Medicare Part C coverage.
Yeah.
And so what does that result in? Well, that results in higher out-of-pocket costs to the insured, the member, or higher premium to the member. So is it a savings? No. Is it a transfer to the individual?
Right.
Yes.
Yeah.
Got it. Okay. Interesting. Okay, so when does someone need to enroll in Medicare? So if you're, and I know we hit some of this earlier, but when does someone need to enroll in Medicare? If they're not working by age 65, but if they're still working, and they have group coverage, should they choose to get on Medicare or should they wait? I guess when does someone need to enroll in Medicare?
About 90 days before they turn 65.
Okay.
Get Part A.
Okay.
Why not? It has already been paid for throughout your working lifetime. Mm-hmm. So why not get in the system and know that you have A?
Okay.
Do you have to? No. If you're on a group health plan with more than 20 employees and your drug plan is creditable, no, I don't need to.
If you're on a group health plan that's an HSA and you enjoy contributing to the HSA, signing up for Part A really messes you up.
It does indeed.
Yep.
Absolutely does.
That's the technical term, messes you up.
Messes you up. It's right in the guide. Yes, sir.
Yeah.
That's right.
Yeah.
Okay.
That's true.
So do you have a lot of people, if you're still working at 65 and you have coverage through work, do most people flip-flop and go over to Medicare, or do they stay on their group plan?
Most people stay on their group plan, and I will caution them typically to stay on their group plan. It's kind of a math problem, though. You have to. What does my group health plan charge myself or myself and my spouse for coverage? And what if I went to Medicare? What would that cost me?
Yeah.
So it's a math problem. But then the other part of that is prescription drugs. It's really important that if you take a laundry list of prescription drugs and you're on a group health plan, very probably that's a better drug plan than the individual Part D.
Yes.
Oh, interesting.
So we've got to watch that very closely. And if you dropped out, a lot of times you can't go back.
Yeah.
So I'm very careful there.
Okay, so this is a leading question, but I just want to make sure everyone is aware. But, we're talking a lot about Medicare with retirement, connected to age 65. You can become eligible for Medicare. And I'm not talking about Medicare for all, but there's a couple other ways or times when you're eligible for Medicare. What are those?
So if you become disabled, Social Security disability, so you're drawing Social Security disability for 24 months, you automatically are given Medicare at that point after 24 months. And then you'll want to look at probably a Medicare Advantage plan to go along with that.
Why an Advantage plan?
Because you probably can't get a Medicare supplement under age 65.
Really?
There are a few, but not many. More Michigan than Indiana.
Okay, that's fascinating. So some of you guys know my personal situation. My father-in-law is disabled, and my mother-in-law still works. And so after this is what an advantage to have folks like Ted and Craig as friends, or even professional friends, like in your corner. Because I was able to talk to Ted at the time about this, and a great bedside manner. Because when you're dealing with health insurance, you deal with real life. And you've got to be empathetic because people are talking to you and they're going through some hard stuff at times. And so was gentle, but then informative. Hey, okay, Mike, he was just on Social Security, or just approved for Social Security disability in 24 months. You're going to need to make a decision here about whether he should get on Medicare and blah, blah, blah. But because my mother-in-law was still working, they met with you, or she and I met with you, or we just chatted. I can't remember. But we opted to not go on Medicare for him at the time because it was cheaper or something like that. I can't remember all the details, but you're going to want to, I guess, if you have someone that is in your household, or someone that's Social Security disabled, just make sure that they are talking to a health insurance and Medicare expert. I mean, that's the big idea.
Right.
Yep.
There's no clear-cut answer.
Yeah.
On any, you need to review everyone's situation individually and let them make the best decision for them.
That's exactly right. I mean, that is the message of financial planning, right? And we often think of this whole topic of Medicare and making health insurance decisions in retirement as a crossroads of two different areas of your financial plan. But what about the scenario? So I'm going to take us to a related topic. If someone retires and they're not 65 yet, so they're not old enough to go off of their group plan that they've enjoyed for years and onto a government provided plan. They've got some years of gap there maybe. What are their options? What do you do? How do you address this health insurance topic for retirement when retirement is early?
Yeah, we spend a lot of time on that. We do a lot of those because that's what people are trying to figure out. So I'm 60. Financially, I can retire if I choose to, but then a big piece of that is, what is it going to cost me for health insurance? So we look at several different options. We'll look at the Affordable Care Act coverage always. We look at the Christian plans, the different Christian sharing plans that are out there, and the pluses and minuses of those. A lot of times we'll look at COBRA, because everybody says, "Oh, COBRA, too expensive." They don't even want to talk about it hardly. But you have to remember, you're buying at the average age of all the employees of the group. And so if the average age of your employees at your group is 40 and your age is 62, it might be cheaper than paying full price on the Affordable Care Act.
Interesting.
Yeah.
Right.
So those are the things we have to look at every time.
Yes.
Go ahead.
I think what's important for people to know is to not make that assumption based upon what their neighbor had happen or whatever. Everybody's situation is definitely unique.
Well, and it's almost, when you're comparing COBRA, which is a type of snake, compared to the Affordable Care Act, I think you're just going to assume COBRA is worse for you because they titled it Affordable Care Act.
Right.
Yeah.
They should be outlawed from doing such things.
Sure,
So,
sure.
Ted, Craig, thank you guys for being on, sharing some wisdom with us. We're going to have you back. I know we will. So, but on behalf of Ted, Foster, Craig Wiker, Josh Gregory, all of us at KFG, that's all the time we have. We'll see you next Saturday for Wise Money with Korhorn Financial Group.
Securities offered through Silver Oak Securities, member FINRA/SIPC. Advisory services offered through KFG Wealth Management, LLC. Doing business as Korhorn Financial Group. KFG Wealth Management, LLC and Silver Oak Securities Incorporated companies are unaffiliated.